In this presentation, we're going to work a fairly comprehensive problem related to the general fund and government-wide activities. We're going to have the information on the left side. We're going to use the blue area in order to record this information. We're going to record the information into the general journal here, then post it to a worksheet, which will be a trial balance, having a beginning trial balance, adjustments where we will post, and then the ending trial balance. This will give us context where we'll be able to see these accounts in order in the form of a trial balance, being able to see what type of accounts then they are and allowing them to be increase and decrease and seeing those increases and decreases as well as working with something that is in balance. This will really help to ground us as we think about recording these types of journal entries. Then we'll go to the government-wide activities and do the same thing, record this journal entries in the government-wide activities and then post those to the trial balance related to the government-wide activities. Again, same kind of idea. We want to have the trial balance, be able to compare and contrast the type of accounts, see something that's in balance, post something so that we'll get a good idea and ground us on how these things are working. Recall that the government-wide activities is going to be on an accrual basis, which we would be more used to if we're in financial accounting or we know financial accounting. And the general fund is going to be on modified accrual, which is going to have some kind of more funny business going on with the governmental accounting. Okay, so we're going to go back. First thing we're going to do is hide some cells. We're going to hide these columns. Why? Because we have two sets of general journals and we put them side by side, and we want to have the worksheet we're working on as close to the trial balance as possible. Try to make things as efficient and easy as possible. So we're going to hide these and then we're going to unhide them when we need them later. How do we hide them? We're going to put our cursor on the column, on column I, where it looks like that. Not like that, but like that. Not like that, but like that. Left click on that, and we're going to drag over to column M, selecting the entire column, let go. Right click on the selected items, and then hide them. Don't delete them, hide them. So we're going to hide those items, and how do you know they're hidden? Because if you see the top part here, it says A, B, C, D, E, F, G, H, and then goes to N, which doesn't go with the song, so something's wrong. And so these are hidden in the middle. To unhide them later, we'll unhide them by selecting anything from the left to the right of it, as long as the hidden cells are in the middle. Right click and unhide. So we'll see that later. It'll be great. We're going to do the same thing over here to the second column of cells on the government wide. So from X to AB, going to select those cells, right click and hide those. So we're going to hide those cells, and now we've got the information side by side that we can then be working with. Let's go straight into the activities. So number one, general fund estimated revenues is that, and then we have the estimated appropriations is that. This is basically the budgetary type of accounts, and in the general fund, we're actually going to post the budgetary activity type of accounts, this is unusual. We don't typically do this for financial accounting. We do it for the general fund. That's what we're going to start off with. So we got to say, well, where are we going to post the estimated revenues? Nice to have a chart of account in order to see that. If we scroll down, we're going to say, well, that's going to be kind of in the income statement type of areas. Again, we're posting the budget, so it's not revenues, it's estimated revenues, but it's down where the revenue accounts would be typically. And so we're going to post it down there. We're going to record it here. The way I would think about it is that revenue typically has a credit balance. Therefore, the estimated revenue is going to be the opposite, so that we can take the difference between the two and easily determine revenue compared to the budgeted revenue. Therefore, the estimated revenue will be a debit. So we're going to debit estimated revenue, bottom line. So we're going to scroll back up top, and we're going to say this equals the estimated revenue on the debit side. Then we're going to credit. What's the credit going to go to? We have appropriations, and that's kind of like what we think the expenses or the assigned expenses in a sense of the budgetary allocations, which are going to be the appropriations. So that's kind of like the expenses or expenditures, and therefore expenses have debit balances. So the budgetary account related to it will have the opposite, which is a credit. So we're going to scroll back up, and we're going to be on this cell on E4, that cell E4. And equals, and we're going to say that's going to be the appropriations. Then we'll pick up our numbers. So we're going to say this number, and I'm going to put the credits as negatives because that's going to help us to post these transactions in Excel in a more efficient way. And then I'm going to use the negative sum or plug formula to pick up the difference. Where are we going to put the difference to? Well, we don't know what are we going to do with it, because we don't usually do this, and when we don't know where it goes, we make up an equity type account if it was for-profit accounting. So these fund balance type accounts, or assets minus liabilities, or what would be the equity type accounts, we make up one called budgetary fund balance, and that's where we'll put the difference. So we're going to go back up and say it's going to be in the net balance, the equity type accounts, if it was for-profit, equivalent equity, and there we have it. So now we're going to post this and see what happens. Here's the estimated revenue. Whoop, I didn't want to do that. Oh no, what did I do? There's the estimated revenue. We're going to post that, so I'm going to scroll down. I want to be in the middle column. Here's the estimated revenue here. We want to be in column P20, cell P20 equals, and I'm going to scroll back up. I'm going to use formulas to do this. I highly recommend using formulas to do this, and enter. Then we're going to do the appropriations. Here's the appropriations. Here's the appropriations. We're in cell P22 equals. We're going to scroll back up and pick up the appropriations. And that's going to be the credits. And there we have that. And then we've got the budgetary fund balance. Budgetary fund balance. That's going to be here. And once we record this, we should have green zeros at the bottom, which will indicate we are back in balance. So in P18 equals, we're going to scroll back up and enter. So there we have that. We're back in balance here. The budgetary accounts, you can see these are kind of like the income statement of budgetary accounts. Total debits and credits are in balance, meaning debits are positive here and credits are negative. Therefore, debits minus the credits equals 0. Green 0, good, means we're okay, good to move forward. What happens to the government-wide activities for the budgetary stuff? Nothing. That's nice. None. Why? Because this is this is on more of an accrual basis, what we would more normally expect, and posting the budget to the general ledger is not what we normally would expect, and therefore not on the more accrual government-wide activities, but on the general fund activities. Next transaction, we're back over here in cell B8. We're going to say that we borrowed tax anticipation note payable. We have a discount on it. It's for 120 days. Note the type of payable that we have here. We borrowed money. That's not unusual, but it's going to be short term. So we borrowed money. We're saying, hey, we're going to get taxes soon. Within 120 days, we'll be able to pay it back. It's a short term type of transaction. Therefore, we're going to record it on the general fund, because the general fund usually takes care of current assets, current liabilities, short term type of activities, as this will be, because it's a short term type of note payable. So we're going to record this, then it'll be much the same as a type of transaction we would think to record a note payable. We're going to get cash. So we're going to say cash is going to be debited. It's a little bit different the way we have it here. We got it discounted like we might see in a bond. And that's basically going to record the interest at the point in time, at this point in time. We're going to say that we're going to record the interest now in this short-term note payable because it's only 120 days. So we're going to say that we have a note payable then is going to be the other side, the anticipation note payable, which is going to be the liability. And we're going to pay back, I'm going to make it a credit, this 546. And then we're going to record the expense, which we're going to call interest at this point in time. So we're going to say it's the discounted amount is going to be the interest, which we're going to put into expenditures. So I'm just going to group it all into expenditures, which is the related expenses type account for the government-wide accounts. How much will the expenditures be? We're going to calculate it this way. We're going to say, well, there's 546,000 times 0.08, 8%, that would be for a year. We have 120 days. So I'm going to basically round this and make every month 30 days, which means there'd be 360 days in the year as opposed to 365. So I'm going to use 360, 12 times 30, 12, so we're going to say divided by 360, and then multiply that times 120 times 120. And that's going to be the interest that we're going to have here. So we're going to say, all right, the interest then is going to be equal to, let's do this with a formula. It's going to be this times the 8% divided by 360, the number of days in a year is rounded rather than 365, times the 120 days. And so there we have it. Now I know I don't have the debits and credits in order, but this is the way I would imagine it as you construct it. If you want to put the debits on top at a later time, you can do so. This is the way I would think of it to construct it. I know I debit cash first, and then I would think about the payable, but I don't know what cash is, so I'll think about the payable, then I'll do the expenditure. The difference then is cash. So the cash is going to be the negative sum, plug formula of these items, or the credits minus the debits, therefore the debits equal the credits. Okay, so we're going to record this out. I'm going to say cash first. Cash is going to go up top. So we'll scroll up top. It's going to be in the middle column. I'm going to say this equals and pick up the cash amount. So cash goes up. We're out of balance until we record the rest of it. Then we've got the tax anticipation note. That's here. So I'm in cell P12 equals, and we're going to scroll over to the tax anticipation note and enter. So there we have that, and then we're going to post the last component, which is the expenditure. So we'll scroll down to the expenditure in cell P23 equals, and there's the 14,560. So there we have it. Now we're going to do the same thing for the government-wide activities. It's basically an accrual type of account, and therefore we would expect the same basic thing for the government-wide side. So we'll pick up the accounts again. It's going to be cash. Then it's going to be the tax anticipation note payable. And then the slightly different account is the expense rather than the expenditure, because we're on an accrual basis, and that's the term we use on the accrual basis as opposed to the modified accrual. I'm going to pick up the numbers straight from our prior journal entry because they will be the same. So there's that one. I'm going to copy it by saying Control-C, put that here, Control-V, paste, Control-V, paste. So we just put the same numbers there. That same number is just pulling those over. We're going to record this. It'll look much the same in the recording. We're in cash in AE3 equals, and we're going to pick up that 531,440. Here's the tax anticipation note. We're going to be here in AE12 equals, picking up the tax anticipation note, and then the expenses down below. And the expenses is going to be equal to the 14,560 there. That puts us back in balance. Let's see what we have next. Next item, we're saying that we have property tax that was levied. The net assessed value of the taxable property, we're going to say is this amount. And so we're going to calculate the property taxes here. And it's going to be, we're going to say the tax rate per $100 is 5. So $5 per $100. Okay, so how are we going to calculate the tax? We're going to say, all right, it's 45,100. This is going to be the property, the value that we're assessing the property at. We'll divide that by 100. So we're going to say divided by 100. Whoop, 100, like so. And then we're going to take that amount and multiply it times 5. And that's going to be the amount that we're going to use and say that that's going to be our receivable amount. Of that amount, we're going to say 4% is uncollectible. So of this amount we're going to assess on taxes, we're going to say 4% is uncollectible. So, all right, how are we going to break those numbers into a journal entry? It's going to be much the same as if we issued like an invoice, except that we're going to record the uncollectible portion at this point. So we're going to say people owe us money, like if we issued an invoice, that's a receivable. So I'm going to say the receivables an asset, it's going to go up. If I scroll over, we have different receivables, current, delinquent, interest, and penalties. We're going to pick up the current receivables because, of course, it's current at this point. They haven't paid us. We just billed them, so it's current. And then we're going to say that we have an allowance. We're going to record the allowance at this point in time. We're going to estimate how much of the receivables is uncollectible, record the allowance right below, right at the same time. So there's going to be the allowance. Let's do the calculation in Excel. Now it's going to be equal to the value of the property divided by 100 as we were instructed times $5. And so there we have it. Now what's going to be the allowance? I'm going to say negative to make it a credit instead of equal. This number times 4%. There's the 90,200. The difference then, negative sum, plug formula, is going to be going to revenue. That's what's going to be our revenue. Note, we're recording revenue here on an accrual basis in essence. And this is a modified accrual general fund. So we might have to do something to it later on because the modified accrual is somewhere between like accrual and and cash. So this is going to be the revenue account. And there we have it. Let's go ahead and post this out. We've got the taxes receivable current portion first. So we'll scroll up to the taxes receivable. Here's taxes receivable. We're in P4 equals. Scrolling back over, we're going to pick up those taxes receivable. Then we have the allowance for uncollectible, the current. That's going to be right underneath in P5 equals. And we'll pick up the 90,200. Then we want the revenue. Revenue is going to be down on the income statement type of accounts down here. Not the estimated revenue, but the actual revenue. And that's going to be in P21 equals, and we'll pick up the revenue and enter. So the revenue goes up, back in balance by the green zeros. Here's our revenue over our expenditures thus far. Here's our budgetary accounts. Actually, let me copy this over. The budgetary accounts are these items. There's our budget. There's our actual. Now we'll record this in the government-wide activities, and it's going to be much the same. This is in essence an accrual transaction. So it looked pretty familiar, looked pretty much what we would expect from financial accounting. So it's going to be in essence the same thing. So I'm over here in T11, cell T11 equals, and we're going to pick up the receivable current. We're going to pick up the allowance right below it. And then we're going to pick up the revenue just as we did before. We're just going to call it something slightly different. We're going to call it general revenues to categorize it. Then I'm going to pick up the same numbers by simply having a formula that will go to those numbers equals, and we're going to go back to our numbers over here. There's our cash, and then I'm going to copy that, and I'm just going to paste it here, Control V, and just paste in the same numbers. So we're just pasting it over, same stuff. And now we're going to post it out in the same way. Here's our taxes receivable up top, and the taxes receivable, we're in cell AE4 equals, scrolling down, picking up that 2255. Then we're going to pick up the allowance right below it. That's in cell AE5 equals, and we're going to pick up the allowance, 90,200. Then we're going to pick up the revenue. So the revenue is going to be down here. We're going to have the general revenue, which will be equal to that 2 million. That puts us back in balance. Let's scroll back over to our activity then, back to the activity. We're now on number 4. Number 4 says we have a purchase order and contracts issued to vendors. Purchase order and contracts issued. So what didn't happen, and you can think of this, I think of this as the purchase order if it was a for-profit organization, where the purchase order is that funny document that doesn't actually have anything posted in for-profit accounting, meaning if we request from the vendor with a purchase order to give us inventory and we have not yet paid for it, then we haven't got the inventory, we haven't paid for it, there's no journal entry, although we track the purchase order. In this case, however, we have purchase order and estimates that we're going to try to assign by actually posting to what we call the encumbrances. So this is another kind of funny thing that we'll do on the general fund. For the modified accrual, we'll actually post this activity, which would be kind of like posting a purchase order, posting the estimates, and what we're doing is trying to assign the fact that we have these allocations of the appropriations that we have assigned out, and we want to be able to see that transparently here, and so we'll actually post it. So again, unusual type of transaction. It's going to result in us having to record an encumbrance and then reverse it. So, when we actually record the expenditure like we normally would when we receive, the inventory, or when we actually incur the expense like we normally would under accrual type of accounting. Therefore, we're going to record the encumbrance, which is going to increase kind of like an expense, but it's more like a holding account. So note that the encumbrance is not an estimate account. It's not really an actual account either. It's an encumbrance, kind of a holding account, a clearing account. It's going to go up from 0 and then go back down to 0 and just basically be a clearing account. I would call it a holding account. So we're going to say, all right, this is going to be the encumbrances. And then where are we going to put the other side to this funny new account? Well, we don't know where it should go, so we put it into the equity type, what would be equity in the for-profit accounting. We're just going to stuff another equity type account there. And that's going to be the encumbrances outstanding, because that's where it goes when we don't know where to put something. So we'll just call it encumbrances outstanding. And there we have it. Why do we put it there? Because it doesn't affect basically the income statement accounts. It's going to be a permanent account. And so we'll put it into kind of the net balance, which would be an equity section for profit, assets minus liabilities section, net assets section, you can think of it. Okay, here we go. The amount is going to be equal to the 2,000,002, and then we're going to credit the 2,000,002, and that's all we do. So we're going to go back over here and post this out. So here's the encumbrances. We're going to go down to the encumbrances down below. We're in cell P24 equals, and we're going to scroll back up and pick up those encumbrances. Then we're going to go to the encumbrances outstanding encumbrances, and they'll pick up the other side of it. So there we have it. Now remember, these encumbrances are just going to be there. We're going to have to reverse this journal entry exactly once we pick up the expenditure, which is what we would actually think of as the normal type of transaction. So what's going to happen in the government-wide transaction? Nothing. Why? Because again, this is a funny type of thing that we wouldn't expect to see. So therefore, in the government-wide, which are more on accrual basis, we don't have it there. Next item is going to be number 5 here. Number 5 says we have current tax collected, delinquent taxes collected, and interest and penalties collected. So we got a lot of money. That's good stuff. It's all going to be cash. Cash is pretty straightforward, so we at least know what to do with that. We're going to say, well, cash is going to go up. That's pretty straightforward. That's going to be a debit to cash. And then we got money from what we would think of if it was a for-profit, like our customers. And we've already recorded them on a kind of an accrual basis in receivables. Now we just need to pick it up from the respective receivables. We got the current receivables. We got the delinquent receivables. That's where we move the receivables at the end of the time period. And then we have the interest and penalties receivables that we charge people for being delinquent, which we put into another type of receivable account. So that's the only kind of difference we have here. We got 3 kinds of receivables. We just want to make sure that we pick up the proper ones for the credit side. So I'm going to say this equals, we're going to credit the current receivables for the ones that are current, equals, and we're going to pick up the delinquent receivables for the ones that are delinquent, and equals, we're going to pick up the interest and penalties receivable for those related to interest and penalties. So then we're going to pick up the amounts here, and these are going to be the credits, and then I'm going to add them up for the cash, which will be the debit amount. So I'm going to start with the credits in G19, negative of this number, negative of this number, negative of this number. So there's our credits. Debit, I'm going to use our plug formula, negative sum of these items. There's our debit. And so there we have it. So this is a pretty straightforward transaction. The only thing that's kind of funny is you got these different receivables. Other than that, basically an accrual transaction. Nothing unusual here. So nothing to see here. We're going to go back up top and record this item. Here's the cash. We're going to record this up top. Here's cash. We're going to double click on it. Go to the end of it. Plus, put the cursor back down. Scroll back down and pick up the cash. Cash is going to be recorded. And that puts us out of balance. Then we're going to pick up the receivable for the current. So here's the receivable current. Something's in it. I'm going to double click on it. Go to the end of it. Plus, put the cursor back down and pick up the receivable current. So that takes down the receivable. Now note we have a negative, we're good. So then we have the taxes receivable delinquent equals, and we're going to pick up the taxes receivable delinquent. So that brings it down. And then we have the interest and penalties. So interest and penalties in P8 equals this item, and that puts us back in balance. So we've reduced our receivables now. So here's our receivable balances, and we've collected on that. So the next thing, there is something funny that happens now that it's going to be related to this transaction, and that's the fact that these two, we have to check, okay, did we record deferred inflows of resources in the prior period? And this will make more sense like when we actually record the deferred inflows. I believe we'll do that at the end of this problem. But what happens here is you'll recall that we recorded basically the income here with this journal entry, revenue, on pretty much an accrual basis. So we basically debited revenue or receivable and credited revenue. That's our normal accrual accounting. But we didn't get the cash yet. And then at the end of the time period, the modified accrual, what the modified accrual really wants to do is kind of keep the receivable on the books, which is an accrual type of account, yet record the revenue on more of a cash basis, which requires us to reverse the amount of revenue at the end of the time period that was recorded that we did not collect. So at the end of the time period, we'll see it here that we're going to reverse the revenue, take out the part that we didn't collect, and then we're going to record the other side not to receivable because we want to keep the receivable on the books. So where are we going to put it? Well, we don't know where to put it. We're going to put it somewhere you would think equity, right? But no, we put it into this new category, which is kind of a liability. It acts like a liability. It's called Deferred Inflows. So this is what we're going to do at the end of the time period to kind of reverse the fact that we have revenues that are on an accrual basis and we want to be like more on a cash basis, but we want to keep the accounts receivable account, which is an accrual account. So we need to reduce the revenues for the cash that wasn't collected and put it somewhere other than accounts receivable. We make up this new account because it acts kind of like a liability, which we're going to call Deferred Inflows of Resources. So now we collected on some of this item that we recorded in Deferred Inflows of Resources, so we have to reduce the Deferred Inflow of Resources. So this is an added transaction, 5B, that we're going to have to do. We're going to say this equals the Deferred Inflow because, what happened? This is going to be the Deferred Inflow. Why is this not picking up the number? I don't know. And that's going to be the negative sum of these items, the delinquents. So because these were allocated to the prior period, and then we put it into the deferred inflow, now we're collecting on it, we have to reverse it. Now, this is where you'll note this number shouldn't be bigger than the deferred amount that we had at the end of the prior period. That's kind of funny. So something strange happened there. You would think this would be equal or smaller than, but it is what it is. So we're going to say that's going to be the other side, and the other side is going to go to revenues. So now we're going to recognize the revenue increase in the revenue back in this time period. Again, this might make more sense at the end of this transaction, end of this problem, when we record the increase to deferred inflows at the end. Okay, so we've got deferred inflows is going to be in P15 equals the 408. It flips to a debit. Again, that's probably not something you'll see most of the time because you would think there would be a credit or go to zero. I'm tempted to adjust this beginning balance, but I won't do that. So just be aware that it's not normal for that to be flipped to a debit, although, something funny could happen. So then we're going to go to the revenues, and revenues is going to be here. I'm going to double click on it, go to the end of it, plus, and pick up that 408,330. And there we have that. Okay, so what's going to happen to the government-wide accounts? And of course, the government-wide accounts is going to have the normal transaction up top. That's normal. But it's not going to have this funny business of this deferred inflow thing that's going to try to do this modified accrual thing. So it's going to be more straightforward over here. We're going to say number 5 on this side is simply going to be the cash is going up. And then we've got our receivable accounts, all of the receivable accounts. And there's a receivable, everywhere's a receivable, and there's the last receivable. Now we'll pick up the numbers straight from the last transaction. You'll note that we don't have that funny account here at all. It's just not there, of course, because it's a funny account. And so we're going to pick this from the prior transaction, equals, scrolling back over, it's going to be this item. I'm going to copy and paste it then. I'm going to say Control-C, Shift, holding down, highlighting 3 cells, Control-V, and there we have it. So we're just pasting it. You can paste it any way you want. That's how I'm pasting it. So we have the cash. It's going to go to the cash up top. Something's in it. Going to double click on it, go to the end of it, and plus, put the cursor back down, scroll back down, pick up the cash. Next, we've got the taxes receivable current portion. That's going to be up top. Here it is. Something's in it in AE form. I'm going to double click on it, go to the end of it, and say plus, put the cursor back down, pick up that number. Then we have the taxes receivable delinquent. So I'm going to scroll back up top. Taxes receivable delinquent in AE6 equals, scrolling back down, picking up the taxes receivable delinquent. Lastly, but not leastly, we got the interest and penalties receivable. So interest and penalties, here we have it. We are in AE8 equals, scrolling back down, and we're going to pick up that 20,960. That puts us back in balance, and we've recorded our receivables, reducing our receivables for the cash that has been collected. What about 5B? Nothing. We don't have the funny thing, the funny business happening there. Let's go back to our data, see what's next. So we're back in cell AE2324. We are in number 6. We have the additional interest and penalties on delinquent taxes accrued, and then we have the estimated amount that's going to be uncollectible. So in essence, we're saying, hey, we've got these delinquent taxes. We're just going to assess and calculate the interest and penalties on it, and we're going to say that comes out to $38,840. That, of course, is we're going to consider revenue to us. That's more revenue. So delinquent taxes, we assess more penalties, call it revenue. So we're going to say that people owe us then money. This is kind of similar to on a for-profit invoicing the clients again. We're going to bill the clients and say they owe us for the penalties now for not paying us the levy that we assessed prior to this. So we're going to have a receivable, and the only thing that's a little different here is we're going to make up kind of a different receivable. We're going to call it interest and penalties receivable. And notice by default, interest and penalties are like delinquent, obviously, because we made the interest and penalties because they were delinquent. That's what allowed us to charge them more money. So we're going to say that's going to be the receivable for interest and penalties. And then there's going to be an allowance. So we're going to record the amount of that we think is going to be uncollectible right here and now, the allowance amount. And let's go ahead and calculate those. So the receivable is going to be for the entire amount. We assess them. And then we think 25% is uncollectible. They haven't paid us already. So these are not our highly dubious items. So it's going to be the $38,840 times the 25%. And there we have it. And then we have a plug formula, negative sum of these items. And there's the difference. All right. And then the revenue is going to go to the revenue account. Revenue account. There we have it. So we're going to include that in revenue. Pretty straightforward transaction. It's going to be more of that's kind of what we would expect on an accrual basis. Nothing funny, nothing to see here that's too unusual. So we're going to say here's the debit on the interest and penalties up top. Interest and penalties. That's going to be here. We are in P8. Double clicking in P8, going to the end of it and saying plus, putting the cursor back down, scrolling back down, picking up that $38,840. Then we're going to put the allowance right underneath it. So the allowance, if we go right underneath it, is going to be here. And that's going to be equal to, scrolling back down, we're going to pick up the 9710. So there we have that, and now we just need to pick up the last component, which is going to be in revenue. So here it is here. Here's the revenue account. That's going to be in cell P21. Something's in it. Going to double click on it, go to the end of it, and plus, put the cursor back down, and we're picking up the revenue of the 29,130 and enter, and that puts us back in balance indicated by the green zeros. What about the government-wide activity? Well, it's pretty much the same because this is in essence an accrual type transaction. So we're going to do pretty much the same here, over here, same thing over here in cell T26. I'm going to say equals. I'm just going to pick up the accounts, which is going to be the interest and penalties. And then right underneath it is the allowance. I'm going to pick up the allowance. You can copy and paste these, by the way, too, if you'd rather do it a different way than I'm doing it. My way is the best, of course. No, it's not. And then we're going to say those three. And then I'm going to pick up the numbers from the prior journal entry. So this equals in U26, the prior transaction over here, same numbers. Only thing different by this journal entry is the name, because we're using a bit more categorization for the governmental. I'm going to copy this, Control C, then Shift down, and then Control V, pasting those items, same numbers. Again, you can copy and paste them or type them in any way you want. So now we're going to record this. Here's the interest and penalties. We're going to scroll back up. Interest and penalties receivable in AE8, something's in it. Going to double click on it, go to the end of it, and plus, put the cursor back down, scroll back down, pick up that $38,840. Then we're looking for the allowance, which will be right underneath the interest and penalties. We are in AE9 equals, scrolling back down, picking up the 9710, and then finally the revenue. So we have the revenue, that's going to be here, general revenue in AE16, double clicking on that, going to the end of it, plus putting the cursor back down, scrolling back down, 29,130. This is the one we want. And there we have it. puts us back in balance there. Let's see what's next. We're going to scroll back over to our activity. So we're on number 7 here in B28, where it says we are notified that we will receive less in intergovernmental revenue. What? So we're going to get less money from intergovernmental revenue. So that's what we're going to have to do there. We have the 88,500, and we're going to have to reduce our budgetary accounts now, because now we're going to say we've been notified that we're not going to get as much money. We have to reduce the budgetary accounts and then account for that in terms of how we allocate those resources. So this is bad news, but that's okay. So we're going to go back over here, and remember the budgetary accounts were up top. We recorded these items. So we're going to scroll back down and say these were our budgetary accounts where we said we had estimated revenue. Estimated revenue, it has a debit balance because it's the opposite of the normal revenue. We're going to get less. We're going to get 88.5 less. So we're going to credit the estimated revenue. So we're going to credit estimated revenue. So let's do that. We're going to go down here and say estimated revenue is going to be on the bottom. And then, something funny happened. Estimated revenue. And then on top, we're going to have the budgetary fund balance, because that's where the difference goes into that kind of, if it was equity type area, if it was a for-profit, that's where we put the budgetary fund balance, because we don't know where else to put it. So we put it in some kind of equity account. And then the amount is going to be, and again, it's not really, I call it equity. Remember, equity for profit, net assets, assets minus liabilities type accounts. And the amount we said was the 88.5, and we're going to credit the 88.5. So there we have it. We're just adjusting the budgetary account for the bad news. So then we're going to say that this budgetary fund balance, we'll scroll back up. Budgetary fund balance is here in P18. Going to double click on that, go to the end of it and say plus. Put the cursor back down and we'll pick up that debit amount of the 88.5. Then we have the estimated revenue. Estimated revenue, not the actual revenue, estimated revenue. Double clicking on that item, plus, putting the cursor back down, scrolling back over and bringing it back down. That puts us back in balance. All right. And then we have adjusted like the budgetary accounts here. So we can see the net budgetary accounts. Here's the revenues and expenditures thus far, and the difference between the two of those. Okay. You'll note as we take a look at this that the appropriations are actually higher than the estimated revenue right now. So that's something that would want to be noted. So what's going to happen in the government-wide activities? Of course, nothing, right? Because we're not going to record this funny business of recording the budget in the normal accrual accounting. So there would be none for number 7 in the government-wide. Next item, we're over here in number 8, where we have the delinquent taxes that are going to be deemed uncollectible, and we're going to have to write off these items. We have the related interest and penalties that we're also going to say are uncollectible. So we're going to have these uncollectible items. So this would be kind of normal, what we would expect from normal kind of accounting, the process that we'll take care of here. We're going to say that we have these delinquent taxes. Remember what happens. We took them in the current receivables, and then at the end of the time period, we're going to move them into delinquent receivables. So of the delinquent receivables, we're going to say that there have been uncollectible amounts that we have determined that are going to be uncollectible. We are therefore going to move them from the receivable to the allowance account. So we're going to take them out of the delinquent receivable and increase the allowance account. We're going to do the same thing for some of the receivables that are in interest and penalties. We're going to say some of these receivables we have here, we don't think we're going to collect. We're going to move it out of interest and penalties, move it down to the allowance. So therefore, receivable needs to go down. Receivables have debit balances. To make them go down, we do the opposite thing to it, credit them. So I'm going to put the receivable on the bottom here. And so that's going to be the taxes receivable delinquent. And then we'll put the allowance on the top. I'm going to do this kind of, again, not 2 debits on top, so it's a little out of order in terms of debits and credits, but I think it makes more sense this way. So then we're going to say the allowance for the current. So there we have that. And then we're going to do the same thing for the taxes. So on the taxes, or interest, for the interest and penalties, I'm going to say the receivable, and then the allowance. So I'm going to do this with one journal entry. You could do it with two journal entries if you feel like that would be easier. I'll do it with just one journal entry, but I won't. The debits and credits won't be in always on top. So we're going to say, all right, here's the allowance, and then the credits to the receivable, right? And then I'm going to do the same thing for the interest and penalties. So the way I would think about it is, okay, I had to credit the delinquent receivables to make it go down. The other side's going to go to the allowance account, which is right underneath it. And then I did the same receivables, credit it. You can think of it as another journal entry if you want, and debit the allowance. Now, if you see this in a book problem, they'll often put these two on top to put the debits on top if they record it with just one journal entry. And so you could do that as well if you need to reformat that in that fashion. Okay, so here we're going to record this. Here's the allowance for uncollectible. So we're going to go back up top, and we have the delinquent. We want to be in the allowance in P7 equals. We're going to scroll back down and pick up that allowance and enter. So there we have that. Next item, we're going to scroll back down, is the receivable delinquent. So receivable delinquent, we got to place that somewhere. So we've got the receivable and the delinquent. That's in P6. Double clicking on that, going to the end of it, plus putting the cursor back down, scrolling back down. So we have the receivable and enter. And then we're going to do the same thing. So the allowance for the interest, same thing, but for the interest. And so we have the interest allowance. So that's going to be in P9. Double click on it, go to the end of it, plus put the cursor back down, scroll back down, and we're picking up the allowance for the interest, enter. And then we have the interest receivable. That's going to be in P8. Double click on P8, go to the end of it, plus put the cursor back down, scroll back down, and we have this item. And that, of course, puts us back in balance here. So what are we going to do for the government-wide activities? Well, this is basically an accrual type of account, so nothing too different. This will be much the same, or exactly the same. So we're going to do the same thing down here. We're going to say pick up the same information. This equals, I'm going to say, the allowance for the allowance, and then we're going to pick up the delinquent receivables. So the receivables delinquent, and then we'll pick up the allowance for the interest, and then the receivables for the interest. And then I'm going to say the same numbers. The numbers are just going to be equal to the same numbers over here. And then I'm going to copy them, right click or Control C. I'm going to paste here, Control V, paste here, Control V, and paste here, Control V. Same transaction. You can copy and paste the numbers or write them in any way you like. Here's going to be the first one we're going to record. We're going to have to do some scrolling here. So we're going to scroll back up. Allowance for uncollectible. So that's going to be here. Equals. Scrolling back down. And there's the 1306. And then right above it is the delinquent taxes for receivable. Plus, put the cursor back down. And we will pick up the credit. And then the next item will be for the allowance for the interest. So that's going to be down here. Here's the interest. Here's the allowance. So that's in AE9. Double click on that. Go to the end of it. Plus, put the cursor back down. Scroll back down. And so we're picking up the allowance. And then we want the interest and penalties receivable. So it's going to be right above it. So we'll scroll back up. And that's going to be in cell AE8, double click on that, go to the end of it, plus put the cursor back down, and we'll pick up the interest and penalties receivable there. And you'll note I'm out of balance by 27,202. So let's go ahead and look at that. Obviously I posted something wrong here. So what I'm going to do is use these tracing items to find that. You can find these over here in the formulas. Under formula auditing, these are the tools I'm going to use. And I'm just going to say, let's point this and see where it's going. That's going nowhere. That's obviously the problem. This is going two places. So that first one, I picked up the wrong number, right? So this first one should be going to the allowance. I took them both to the taxes receivable. So cell U33, I put this V34 in both accounts, so it should not be in the allowance account. So if I scroll back up and I take a look at the allowance account, we got this V34 that shouldn't be there. What it should be is going to be this number, and that'll put us back in balance. So note, if you use formulas up here, you can go back in and you can kind of figure out what's out of balance as you go through the problem. So we're going to stop here and continue in the next presentation. We're going to unhide these cells and we'll continue on next time.